Whoa. Good morning, traders from Chicago. It's 8:03 a.m. Chicago time on Monday, the 29th of March, 2021. I am back, large and in charge after all that eating last week. This is episode number 1961. Thanks for being here. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a lot on our plate, a lot going on. We'll jump right into the convergent trading pre market summary sheet here. We do have a market that is slightly risk off as it slipped lower on the reopen right off of Friday's close. Sunday's reopen was pretty much in line. There's a lot on the news as a result of this. You still have this lodged, ever given massive container ship blocking the Suez Canal, which was slightly dislodged this morning, which has been pushed back by strong winds, and they're going to make a second attempt here soon. This is holding up approximately 17% of the world's trade. Insane how much that canal handles. But the big news is the fund run by the family office of Tiger Cub Huang has been having to liquidate a position that's fairly large that has caused massive block trade activity on Friday, leading to a 62 point rally there. The drop overnight is being attributed to the fact that Nomura and Credit Suisse are in the hole to the tune of about $2 billion for Nomura and about $4.5 billion, and these are rumors only, unconfirmed. $4.5 billion for Credit Suisse. And so the expectation is other lenders, other bankers are likely trapped in this fund going spinning out. This fund had very large positions which were not reported in typical SEC statements, allegedly as a result of the fact that they were using swaps as opposed to stock. And so this is causing the market to be nervous. In addition to that, we have the fact that we're coming into quarter end and month end this week. Some selling is anticipated, who knows? But we also have non-farm payrolls and unemployment this Friday. So pretty busy week, not seeing much in the way in terms of how the market is likely to trade. Not sure what's going on with my Eurex feed. It looks like it's down here. So that's where we stand this morning. Again, mild risk off. The laggard today is silver. May silver is trading at $24.90, down 21 cents or 0.83%. The Russell's off, by the way, over 10% on the year, which is considered a market correction. The Russell is down 12.3 points or 0.55%. The S&P's off 21 points or 0.54%. Gold is off $9, still hovering around the $1,700 mark, trading at 1723.30. The Dow is down 162. The Nasdaq's down 62. Crude oil off 26 cents. And the leader today is, I mean, my Eurex feed is off, but the best I can tell is the bonds, the cable and the bonds, the U.S. bonds are up 6 ticks. So that's where we stand. I need to look into this this data situation on IQ feed. So you have it there in front of you. There's a lot going on. Again, there's a massive margin call for this fund. Archegos. I don't know how you say that. Bond yields are still in play, And then today we have Dallas Fed and Fed's Waller speech. So far, the overnight session in the ES has traded 253,000 contracts. Almost 100% of the inventory is short, with about 35 and a quarter points of range, and is balanced so far. We have a relatively Gaussian profile or volume distribution so far. It's going. We're trading. We traded down to the point where the market had generated the run up, which was 34 and a quarter. We have singles at 34 and a quarter, and that's where the excess began. So we pushed overnight to 28.75, and we're holding steady right in the range of those single prints that were created on Friday. So we did see higher volatility last week while I was gone, and we did see a solid test down below the 3,900, and then the market, of course, rallied on Friday pretty strong. Let's take a look at what we've had so far. Let me pull up the chart. Here it is. So I'm going to start things off with the composite, the daily composite. Remember, every bar here represents an RTH session, a day session. The light gray boxes represent week on week. That's just a range or a box or a profile for the week. And then the alternating colors are month on month. So it goes dark, then light, then dark, then light, signifying a month. So we're about to finish up a month and start a spree of dark boxes representing weekly ranges, starting Thursday. So that's where we stand. What we've done and what I talked about last week is this thing is where I left things off with it one time framing down the way it has been. We're at risk, and this is where I left. I left on Tuesday. I had warned that if it gets below 75, we're likely to see it push all the way down into 40. It opens up the door for a test of 38.50, 38.40 down in this area. And it did do that. We came in on Thursday, and it had broken below the one-time framing on the weekly, so it's expected to flush down. And it got to 43 and a quarter versus the expected 38.40 area from way back here. This high volume node right here. It held above there, and we had a rally day on Friday, but still one-time framing down continues. The weekly had broken the low, so one-time framing up on the weekly was broken at 75, and we established one-time framing down on the weekly last week. So paying attention to this last week's high is going to be important. The 39.68. This morning, you can see we're trading right in the middle of Friday's range. We have a lot of acceptance beneath us. The point of control for this let me grab it. The point of control for this last week, right there, 39.25. That is the big magnet in the region. We have another magnet at 36. There's a lot going on in this area, as you already know. We've traded around this area quite a bit, but as this thing pushes down, I'm expecting it to see a lot of support in this area right here, representing the high volume node and the acceptance in the region of 39.32 till the 39.22 39.36, this big area right here. So as we hold steady in the overnight session, We'll see if we get some push down or if we respond up to the prior day's close or what's going on here. But overall, we've seen the market push up. You could see the value, the point of control shifting up with price. So price makes higher highs, higher lows. Value shifts slightly higher. We have good balance here in this area, which we tested the following week and held. Then we have higher highs, higher lows with the point of control shifting up, and we get this big block of just blunt volume, which we pushed into on Friday. This was a difficult area. We talked about this early last week, Monday, in the trader bite, and then now we're shifting to a lower high, lower low, lower point of control. To me, this looks like in price and in volume, we're starting to accept lower prices despite the fact that we've been shifting up all along. So this doesn't mean that we should be bearish, by the way. It doesn't mean that, hey, things are looking bad for the longs, let's get short. This just that generally the market rounds off, consolidates, and then fails when it rolls over. But overall, macroeconomically, you have to admit that the stimulus went out as expected. The vaccinations, especially in the United States, although Europe and the UK remain behind. In the UK, vaccinations are ahead of schedule, which is a huge boon for the economy for the return to full employment and all that stuff. So there's plenty of news, in my opinion, overall, to keep this buoyed up here and holding near all-time highs at 39.7350 in a day session. So we're not giving up. We're not giving up these prices very easily. So I wouldn't get too negative on the ES. We'll see what today brings, and if it starts to fall below last week's point of control, 39.25. But overall, this is a pretty strong position for the buyers in the ES. Now the move up on Friday was news based. I don't know if we'll have an SOC. Looks like the SOC is down near 39. What is it? 39.20 something. Hang on. No, 39.06. It looks like it reversed down here and then started pushing up for 62 points. But we'll see. Today is really important. It's really important to see what it does. We're holding steady right on top of the overnight point of control, on top of the mid, on top of the full session VWAP. It's fairly in balance, but it's doing so in this thin area from Friday. I'm getting ahead of myself here, but it's doing it right in this stem, this single prints of Friday. It's holding right in there, and it's kind of a tipping point here. So watching how it responds this morning is going to be important. The expectation is that the VIX will be elevated, that we are going to get some decent volatility, and there will be some pretty good opportunities. Again, watch your risk. There should be pretty good opportunities for gain and loss this week. So, and also when you look at how it did this rally on Friday, the delta just really poor. 51,000 negative looks almost like a data error to me, but it isn't. I checked it. It traded both sides. There isn't an issue with the delta, but the delta just sank on Friday while the market rallied. This looks suspect to me. My primary expectation is we're likely to move back into balance today. Okay. So let's move on. We basically did the analysis for what has happened Friday, as well as what we're expecting, all in one. Let's jump right into expectations for today. Let me turn on stock zones, master levels. So, what are we looking for today? Here it is. This morning, sorry, my computer's just not prepared. Um, this morning, again, we're opening on top of the overnight point of control. We're opening right by the mid, the full session VWAP. The expectation is an attempt higher early. I'm expecting it to become responsive back to the single print at 34 and a quarter right here. So this is 34, the 34 area. Expecting it to consolidate here and then push in a responsive way back towards the 25, 22 area before it consolidates and finishes strong into the close. This given everything that we have here, the expectation is we are likely to balance out following Friday's action. We're expected to balance out and move back towards where we were. Again, this is a news-driven event. The expectation with news-driven events is that they're likely to return to the scene of the crime, and that's my anticipation. Secondary, open, test down, consolidate down here, get an impulse higher, move to the upper end of the range to 39.50, battle the 50 up here. This is the 50. Battle the 50 up here, consolidate for a while, and then start to squeeze higher as we push back through the single prints as it fails to find sellers to continue to move lower. It's expected to continue higher, then to rotate higher to 58 and to challenge last week's close at 64. Friday's close at 64. That is the secondary scenario. We're opening in range above value. Obviously, value did not move on that move on Friday. We're opening in range above value, so I'm expecting a response early on. But the overnight inventory is 99% short. So that's why the primary scenario is it's likely to kind of push up a little bit before it moves down. So the areas to pay attention to immediately are the mid and VWAP in the 44, 46, 45, 46 area, 50 above that, 58 and 64. 58 and 64, which brings us to the overnight high. So 58, 58 here, and 64 are the key areas above. Below us, 34 brings us back to 25. That is the weekly point of control. Brings us back to 22, which is the MC point of control of this region. And if it starts to fall through, then we're looking at the next stock zone down into the 16-15 area. These are the areas I'm expecting the market to respond to. Does that make sense? We're 9 minutes to the open. Good week to pay attention. There's nothing in the way, and volatility expected. Volatility expected this week. Great week to just stay focused and stay on game and not get distracted during the active trading hours. The other thing I wanted to let you guys know is Eurex, the fully electronic German exchange, announced that it's releasing its own micro products. I find this incredibly exciting. I founded and run a brokerage called edgeclear.com, and we met with them last October. We met with management, pushing them to look at creating micro products based for the Euro stocks, the DAX, the Bund, and to bring them to market because it just creates an opportunity for those who can't trade the U.S. regular hours to trade Eurex at lower risk. And it looks like I'm sure other people have been pushing for this. I'm not taking credit for this. I'm sure that there's a lot of pressure from the CME micro products and SMFE. And so they have released a product that's coming out April 19th, I believe. The specs for it are out. I'm very excited about this. Eurex doesn't do the member versus non-member, and it doesn't charge a lot for its data. So this creates an opportunity, is something I'll be looking into and talking about a little bit more. Eurex is where I cut my teeth and made my first money in futures back in 2003. It kind of holds a special place in my heart. I'm a Eurex licensed trader. I just think it's a strong exchange, but their products have become too big for most independent traders to trade. But just know that micro Eurex products are on the way, creating more opportunity, more variety for futures traders. As always, futures trading is not suitable for all investors due to the leverage, but the more micros we have, the less risk I believe we have to take in order to participate in what I believe is the best product out there versus equities and others. Good luck, and I'll catch you tomorrow morning. Take care.